The crypto and traditional markets are dumping today after multiple news events caused a cascade of selling and fear in the market. This is your Altcoin Buzz news. Hey, what's up everyone? My name is Cody Buffington. Make sure to like, subscribe, and turn on notifications so you know when we drop our latest content. Follow us on Twitter at AltcoinBuzzIO, and as always, this is not financial advice, and we wish you the best of luck in your crypto ventures. Bitcoin feels the pressure from new banking chaos in the United States, with Bitcoin's price action falling below $20,000 for the first time in 2 months. This came off the back of a major restructuring at Silicon Valley Bank, or SVB, the United States' 16th largest commercial lender. SVB Financial said that it was selling its entire securities portfolio at a major loss as part of a plan to raise over $2.2 billion in capital. The result was a collapse in SVB's financial share price, which shed 60% during the session in a move all too familiar for crypto market participants who remember the recent demise of Silvergate Bank. SVB pinned the blame for its troubles on the Federal Reserve and its policy of quantitative tightening, a process of removing liquidity from the economy which has put pressure on risk assets across the board. CEO and President Greg Becker wrote, "We are taking these actions because we expect continued higher interest rates, pressured public and private markets, and elevated cash burn levels from our clients as they invest in their businesses." But that was just one piece of the FUD news that came out yesterday. The New York Attorney General filed a suit against Kucoin on Thursday, alleging the Seychelles-based crypto exchange is violating securities laws by offering tokens, including Ether, that meet the definition of a security without registering with the Attorney General's office. The suit is the first time a regulator has claimed in court that Ether is a security, though the Securities and Exchange Commission Chair Gary Gensler has hinted that his agency might consider Ether to be a security. The SEC's sister regulatory agency, the Commodities Future Trading Commission, or the CFTC, has long maintained that both Bitcoin and Ether are commodity assets. The Attorney General's suit argues that Ether is considered a security under the Martin Act, a 102-year-old New York anti-fraud law that gives the Attorney General powers to investigate securities fraud and bring both civil and criminal actions against violators. Because the value of Ether is dependent on the efforts of others, including co-founder Vitalik Buterin. The New York Attorney General's office said, "The petition argues that ETH, just like Luna and UST, is a speculative asset that relies on the efforts of third-party developers in order to provide profit to the holders of ETH. Because of that, Kucoin was required to register before selling ETH, Luna, or UST." The Attorney General also argued that Kucoin sells unregistered securities via Kucoin Earn, its lending and staking product. The Attorney General's office was able to create a Kucoin account using a computer with a New York-based IP address to buy and sell digital tokens, for which Kucoin charged a fee. Next on the government's well-timed FUD was the U.S. Treasury Department's proposed 30% exercise tax on the cost of powering crypto mining facilities. As a provision in the department's Green Book, it lists a tax proposal and explanations for the U.S. President's budget proposal, which would create a phased-in tax based on the cost of electricity used in crypto mining that would be imposed on companies using computing resources to mine cryptocurrencies. These companies would also be required to report how much electricity they use and what type of power was tapped. The tax would be phased in over the next 3 years, increasing 10% each year. The provision explicitly makes the case that this type of tax may lower the overall number of mining machines in the US. This is part of Biden's new tax plan, which also looks to increase capital gains tax from 20% to 39% as well. According to data from CoinGlass, those who were long Bitcoin yesterday lost more on March 9th than any other time since the FTX implosion. Bitcoin long liquidations totaled $94.1 million, with the day's total crypto tally coming in at $248.8 million. Can Ripple pull off a win against the SEC? XRP's price has been seeing moderate gains despite a general cryptocurrency market pullback. XRP's price extended its gains on March 9th, rising around 1.5% to 40 cents despite a general market downturn in the crypto market. The rally in XRP started on March 5th with the XRP market cap gaining over 10% in the past 4 days. XRP's gains appeared as investors pinned their hopes on Ripple winning its long-running courtroom battle against the United States Securities and Exchange Commission. On March 6th, U.S. District Judge Annalisa Torres issued a ruling on motions filed by Ripple and the SEC to exclude the comments of an expert witness from the upcoming summary judgment, removing the so-called expert number 1, Patrick Doody, who the SEC roped as its primary witness to testify about the perceptions of a reasonable XRP purchaser, which led XRP market participants to believe that Ripple may end up winning the lawsuit. In other words, the SEC's argument that Ripple sold XRP as an unregistered security to gullible investors may fall flat. The Ripple CEO said that he expects the lawsuit to conclude in the coming single-digit months. Decentralized lending protocol Aave moved closer to delisting troubled stablecoin BUSD on Thursday. Members of Aave's decentralized autonomous organization voted overwhelmingly in favor of a proposal to dramatically increase the cost of borrowing BUSD while decreasing the revenue accrued by its lenders. According to its author, Mark Zeller, those actions are intended to de-incentivize use of BUSD. The vote comes as a growing list of market participants have backed away from Binance's dollar-pegged stablecoin amid regulatory uncertainty. Mark Zeller wrote in his proposal that the circulating supply of BUSD will trend towards zero over time, making its offboarding necessary. As of writing, Aave held nearly $11 million in BUSD liquidity from its lenders and had $7.6 million in the stablecoin loaned out. Binance CEO CZ said a couple weeks back that BUSD, which was issued by Paxos, is fully backed, and with its new regulation being enforced, BUSD would slowly fade as people redeem BUSD for USD. With BUSD being redeemed and taken out of the system, Binance has been minting lots of new True USD or TUSD as a stablecoin alternative for its platform. TrueUSD has minted 343 million tokens since integrating its Chainlink Proof of Reserve secure mint just a couple of weeks ago on March 15th. TrueUSD is also implementing zero-knowledge proofs to show resolution to deliver additional transparency and trust to crypto users. If you are looking for a new stablecoin to use, you can also buy, sell, and trade TUSD on Binance US. You can also get whitelisted for the Cristiano Ronaldo first official NFT collection, receive his free souvenir NFT, and earn $500. We partnered with Binance US to bring you guys this offer. Just click the link in the description below and type Altcoin Buzz as the promo code. Huobi's HT token, the native token of the cryptocurrency exchange, momentarily dropped 93% on Thursday for reasons that are unclear. The token dropped from a 24-hour high of $4.81 to a low of 31 cents on Huobi's exchange, and just before the crash, $2 million worth of sales were reported in the 5 minutes leading up to it. Normally, buys on the Huobi token amount to $600,000. The wild price action was notable because the Huobi token is one of the larger cryptocurrencies with a market cap of $630 million. Crypto traders follow the token partially because Justin Sun, the founder of the Tron blockchain, has disclosed that he is a big holder, in addition to being a leader of the exchange's strategy. Justin Sun said in a tweet that Huobi's exchange operations are safe, as are its wallets and backend. In a second tweet, he apologized for the leverage liquidation on the market caused by a few users, and said Huobi will create a $100 million fund to improve multi-currency liquidity. Hedera, the team behind distributed ledger Hedera Hashgraph, has confirmed a smart contract exploit on the Hedera mainnet that has led to the theft of several liquidity pool tokens. Hedera said the attacker targeted liquidity pool tokens on decentralized exchanges that derived its code from Uniswap v2 on Ethereum, which was ported over for use of the Hedera token service. The Hedera team explained that the suspicious activity was detected when the attacker attempted to move the stolen tokens across the Hashport bridge, which consisted of liquidity pool tokens on a Saucer Swap, Pangolin, and HeliSwap. Operators acted promptly to temporarily pause the bridge. Earlier, Hedera managed to shut down the network access by turning off IP proxies on March 9th, and the team said it identified the root cause of the exploit and is working on a solution. Once the solution is ready, Hedera Council members will sign transactions to approve the deployment of updated code on the mainnet to remove this vulnerability. A tweet from DeFi research firm Ignas said, "Advice, get your funds out now. The exploit is targeting the decompiling process in smart contracts." The price of the network's token Hedera has fallen 7% since the incident roughly 16 hours ago, in line with the broader market fall over the last 24 hours. That's it for your Altcoin Buzz news update. I'm your host, Cody Buffington. Thanks for watching.